talking about the hotel aspect of things, the pivot and market dynamics of hospitality, income generating assets like that. Over the past years, you've shifted your core focus towards procuring and disposing of hospitality and income generating investment property. What kind of market signals drive that transition, and what makes this asset classes so attractive right now
Mhm.
that you would say, yeah, this is it.
Yeah, great question. Most people looked at us, especially when we were, when I was doing my brokerage through Sing Commercial, which is in a partnership with KW Commercial,
Yeah,
in about 2018. My other business partner, local here in San Antonio, and I,
yeah,
we launched our company, as you mentioned, called Spur
yeah.
Equity.
Hmm.
That's our private equity fund management company where we are investing with other sponsors, other developers
Hmm.
in commercial real estate. I didn't really look at this as a pivot, even though I've been selling hotels for the last 15 years. So
Hmm.
I've had a lot of knowledge in regards to what my buyers and my sellers were doing in the field. And we've done investments where we've done multifamily, we've done land development, we've done construction, industrial, other commercial assets, including now on the data center side where we're doing a project in North Carolina. But what attracted me to hospitality was that it stood out because it reprices every
Hmm.
single night. And apartments, if you look at on the other hand, you are basically stuck on a lease for 1 year
Absolutely. Yeah,
before that repricing might happen. So hotels adjust on a daily basis
yeah.
based on demand, right?
Hmm.
And that gives operators tremendous flexibility. So this is what we've seen. This is what we like. So as an investor, I
Hmm.
like to invest in businesses, not just buildings, not just real estate. And that's what that does. Being involved in hospitality business, you have many, many upsides. You can look at this because this is an operational business. You can
Hmm.
look at this as that what can he do? What can he change? You can change
Yeah.
management, you can change, and you can have better revenue management information in there. You can improve the brand, you can improve technology.
Hmm. Hmm.
Small things that you can do can drastically increase your NOI in this business. And so that's what we did. I mean, today we invested in our third hospitality business. We started just last year on the purchase side, on the investment side through Spur Equity, and we've been very happy just because we're seeing that we're buying in a cycle where we're sort of at the bottom right now. And
Uh-huh.
as the market recovers, so will the investments on the hospitality side.
Right. Okay. Oh wow. Yeah. Yeah. So on when it comes to hospitality, underwriting hospitality, and you talked about the bottom cycle right now, to which is 2026. Hospitality asset carrying a unique, they carry unique risk reward profile compared to your traditional real estate. You alluded to that right now. How are you helping your clients underwrite operational risk, shifting cap rates and travel demands you talked about? Obviously those are the things that really had to the shifting and pricing in today's economy climate.
Yeah, great question again. I think, most people make a big mistake when they underwrite hotels, kind of like apartments, like what we are used to, because a lot of
Hmm.
us, when we got started in the investing world, we were investing heavily in multifamily just because of the right timing, right? And for us, we started right before COVID, and really after COVID, we really took off because of the market and the demand that happened in the market.
Hmm.
As I said, first, hotels are businesses first before they are real estate, and they're very
Hmm.
heavy real estate. So when we underwrite a hotel, we spend a lot of time evaluating the management before we evaluate the building itself. So we'll look at a couple of strategic things. We look at ADR growth, we look
Hmm.
at occupancy trends, We look at RevPAR, we look at maybe labor efficiencies, we look at, franchise agreements because a lot of times hotels have a brand, a franchise that's behind it, that's driving a lot of value. So we look at that and think, hey, is that a good fit, or can we change the franchise? Can we do something else to it? What are the PIP, which are renovation requirements that are going to be for that franchise itself? We look at online reviews. We look at market competitive supply that's coming in the market. We look at the local demand that's happening in the area, and the revenue that can grow from it, right? So interest rates matter, obviously, right? Insurance costs matter, property taxes, all that matters. But great operators, they consistently outperform average, operators. And the one thing that is there is that a lot of people, a good operator will see value, and a subpar average operator will see a problem, right, in the market. So that's what we're focused on. We're focused in today's market on diversification. We're looking to see where can we go where there's multiple demand generators versus maybe one company or one employer that's giving all that growth in that area.
Okay, awesome. So awesome. So pretty much you look out for markets that that yields. Talking about yields. How do you unlock income generating yields for investors that seek a strong cash flow? Where are you finding these most resilient income generating opportunities today? What are the red flags and what red flags are you warning them to really stay clear of in terms of
Yeah.
ma-
So like, for us, in today's market is a very different market than when it was maybe 3 or 4 years ago, right?
mm,
Today's market, it really rewards a disciplined investor. And so we really like triple net properties. So we've done lots of even investments and syndications in the triple net space. Our clients love buying and selling triple net investments. And the reason for that is because the tenants are
mm,
responsible for all the risk. Risk meaning higher taxes, higher insurance costs, maybe maintenance costs. So,
yeah,
it really reduces the investor's surprise, because they are after a yield, they're after a return, and oftentimes
mhm,
you can get that, and you can beat money savings, lying in your savings account or in your high yield savings accounts, in a
mhm,
bank or anything like that. Plus, on top of that, you have tax advantages. You can still depreciate and do accelerated depreciation, just tax
mhm,
advantage strategies that we all talk about, within our investment firms itself. So in hospitality, we're always looking for operational upside, right? And so
mhm,
that what that means is that by doing small things, how can we meaningfully increase the NOI within the space itself? Relationships are another comparative advantage that we have in the market itself. After being in this brokerage business for now over 20 years, we've built a lot of relationships with our clients. We've built it with owners, we've built it with lenders, we've built it with other brokers across the country. A lot of the opportunities never really hit the market, yeah, right? We can either buy or sell those type of opportunities before they even hit. So that relationship really matters a lot. And in terms of biggest red flag that you were talking about,
yeah,
I think people buy a lot of times based on emotion,
okay,
right? And a lot of times people they ignore deferred maintenance, so they maybe underestimate insurance cost. A lot of times people assume that lower interest rates will solve every single problem. Obviously, that's not the case, right? You have to be an informed buyer and an
yeah.
informed seller in today's market.